Today's focus is going to be on NEIF's support of small businesses and nonprofits. This does kind of fall under our commercial category. There are a few kind of gray area cases where some what would normally be or fall into the residential would fall into this commercial category of small business nonprofits. We'll get into that a little bit. Um, and otherwise, I'll go ahead and get started. Um, so who we are, what we do. My name is Trey Muffett. I'm the Senior Director of Business Development at NEIF, and welcome to the August installment of the Go Greener Academy. This is a service that we provide for our contractors and our entire network of individuals and entities alike. We have a lot of thought leaders that come on. We talk about a lot of new technologies. We talk about rebates, state of the economy, state of the industry. If there's any topics that you want us to cover, by all means, send us an email, let us know, put something in the chat on things that you are specifically looking for, and we'll continue to provide information as we can and keep everybody up to date on again, whatever you're looking for and whatever we think is important at the time. One of the things that we get a lot of questions about is how can we finance for nonprofits? What do we do for nonprofits? What can we do? Hey, I've got primarily a residential contractor that does some light commercial that might have a bakery or a grocery store or be doing an HVAC unit for a small shop. Can we do that? And the answer is yes. And so that's why I wanted to cover this topic today, because I get that question probably 3 or 4 times a week. So what we'll get into is what is the base mechanism by which we finance projects, and then what support or programs or additional resources do we have for small business nonprofits, and then in general, what does NEIF do and provide to the contractors that are doing these types of projects? So that being said, let me move my toolbar and actually get to this presentation. All right, so who we are. NEIF is a B Corp lender, so a benefit corporation. A benefit corporation is a designation that a business is meeting the highest standards of verified performance, accountability, and transparency. We demonstrate that through a high social and environmental impact, and we're graded on that every year. And we actually make a legal commitment to changing our corporate governance so that we exhibit transparency by allowing all of our information and our performance to be measured against these standards. And so again, this is providing fair, transparent financing for energy efficiency, resiliency, and sustainability improvements. And this covers a wide range of projects: HVAC, refrigeration, lighting, EV chargers, renewables, storage, pretty much anything that you're going to be doing, we can cover. Something to consider different than residential is for the commercial projects, and we'll get into this next, is the mechanism by which we finance is what's called an equipment finance agreement. We'll talk about what that is and what that means for the only limit on what types of projects we can do. We've been in business for a long time. Peter Cratchit, he was working with his father with a consumer lending bank back in the day, and then combined that with Matthew Brown's kind of program world. And so about half of what we do is acting as the lending arm for utility programs or green bank programs or government muni programs, whether those are federal or state. And we'll show you some of those programs because I think those are really beneficial to some of the small business and nonprofit organizations and how they can really help with those. And then the other half of our business is market rate financing, both commercial and residential. We are operating residentially in 40 states currently. Commercial is nationwide. We have about I think this is larger now, 20 to 30 utilities, green banks, or other organizations that we work with as the lending arm for those programs. And in some cases, the administrator or partner, and we'll talk about the differences there. A lot of those programs provide rebates for qualifying projects. And then where NEIF comes in is they do reduced interest, where the utility or the organization that we partner with is either buying down the interest rate or to reduced interest or all the way down to 0%. So they'll provide rebates for qualifying projects and then reduced interest or 0% financing through NEIF. Currently, I think we're the only certified B Corp lender that specializes in these type of energy efficiency and resiliency improvements. We were named a home improvement expert partner by the US DOE, and we have a partnership with Energy Star and a variety of other organizations. Most of our clients, as you probably are aware, are contractors by true definition. And I'm going to use that term loosely because it's not just contractors, it's entities that might act as a general contractor or energy efficiency management companies or as consultants in any capacity that are helping to improve the building's overall efficiency, IAQ, indoor air quality, health of the inhabitants, and useful life of that building. Right. And so we also partner with a lot of manufacturers, distributors, new technology groups, and in different capacities. But ultimately, the majority of our services are geared towards the contractor, the installer, and their customers. Right. So while the contractor is our primary client, customer, and our services that we provide are for you and to help you grow your business, the loan itself or any of the financing is going to be between us and your customer. We also have a variety of resources for your customers that we'll talk about as we go on. So what we want to cover today are the basics of equipment secured financing. What is it that we do? And there's some nuances when it comes down to what we can finance and the mechanisms by which we finance when it comes to specific projects like solar or energy service agreements or larger multi-measure scale projects. We'll talk about what we can do, but mostly what you're going to see for small businesses and nonprofits is this equipment secured financing. And we'll talk about exactly what that is and what that mechanism is by which we finance and what that means for your customer to get approved and the loan itself. And then what programs or other market rate financing is available for these small businesses and nonprofits, and then what systems are in place for all of our approved contractors to utilize and the other resources that we provide. So that being said, what is an equipment finance agreement? Equipment finance agreement or equipment secured financing is similar to a car loan, right? So we go through traditional underwriting of the customer, and this is traditional credit underwriting. Our internal mission is energy efficiency, sustainability, and resiliency, right? And most all of the programs that we partner with or that we are the lender for are going to have energy savings or energy efficiency renewable mandates that would qualify that project. Okay. And again, that's what we focus on, and that is our internal mission, but that does not limit you from financing projects that don't necessarily have massive energy savings or are not high efficiency equipment. Part of the mission is this resiliency, right? So that's a key part that a lot of people miss is resiliency includes a wide variety of upgrades or project types. And what I mean by that is there's a lot of cases where, let's say a facility has an oil boiler and there isn't really options to swap that out with high efficiency heat pumps or some other type of heat source, right? You have to put in a new boiler. We understand that whatever you're doing, replacing old equipment with new equipment is going to be better than what was there before, right? And so we don't have to have energy savings. We don't have to have Energy Star rating or high efficiency appliances or equipment being put in order to finance. Again, that's our internal mission. That's a lot of what the programs do for our market rate or market-based financing, it can really be anything where equipment or removable assets, non-fixed assets, are the majority of the project. There's not a really hard line as to what is the majority of the project. But let's just say 60% of the total project cost is equipment or products that could theoretically be removed. We say theoretically be removed because the financing is going to be secured to that stuff, right? We don't actually go and take that stuff, but that's how securitization works, right? So the financing is going to be secured to the equipment, the non-fixed assets. All the other portion of that project cost can be anything: labor, permits, engineering. You got to get a crane to rent a crane to get stuff on a rooftop, or in the event that partial roof repair needs to be done in order to support equipment. We see this on a lot of nonprofits, especially churches, small businesses. If there's anything associated with installing these products or this equipment, that can all be covered in the financing. Okay, so again, equipment secured financing, there is just standard credit underwriting. So we're going to look at potentially the cash flow of the business, or otherwise we can accept what's called a personal guarantee, which is customer saying, hey, my personal credit's really good. My business is newer or not entirely that cash flow positive. We can use other means as a co-applicant or to back up that application in order to approve the customer. General loan terms, 1 to 7 years for under $150,000. If it's over $150,000 and mechanical, lighting, or solar, we can go out to 10 years. Interest rates are going to vary, but generally they're close to prime up to 13%. Really depends on the term and the credit or the risk of the borrower. One of the benefits of working with NEIF is that we have a closed network of other capital providers that we can send projects to get lower interest rates or to provide options, right? If there's something that we can't finance or it's denied by one of our partners, we have other options that we can pursue to get your customer financing. This being an equipment finance agreement, it is considered to be on balance sheet. There are some options to have a project financed off balance sheet. We'll talk about those as well. But the dollar amount is the key there, and the energy savings is key to those other loan types or structures, which typically aren't met for small business or nonprofits. Sometimes they are, but again, we'll go over those briefly. But again, another one of the other advantages is that this is pretty easy process and pretty quick turnaround. So we get an application from your customer, we get a scope of work or an estimate from you. We send that to underwriting. Usually within 2 to 3 days, they come back with, hey, we need either balance sheet or personal guarantee or some other means of documentation that this borrower's credit is good enough to approve, and then we can approve that customer. And typically we can do pre-funding. We're going to get into some more of the benefits of our financing a little bit later on. Pre-funding meaning that we can distribute up to 50% or a certain amount of money to you directly once the customer signs the loan docs in order to order materials or for down payment or deposit, and then the rest would be upon completion of the project. Okay, well, that's kind of a lot, but it is very simple, right? So the equipment finance agreement is a simple financing mechanism, and the process is pretty simple. Again, I recognize a few of you that have already gone through this and kind of know that process, but we'll go over it in some more detail. And then at any point in the future, if you have any more questions or you want a refresher or you want to have a training with you and your team, by all means, let me know and we'll get that on the calendar. For those of you that might not be registered with NEIF, that is one stipulation that we have, is that you are approved with NEIF. We want to make sure that you're a legitimate contractor with proper licensing and insurance to do what you're doing. Otherwise, there is no cost to be part of our program to access any of our financial services, both residential and commercial, or any of our other contractor support, sales trainings, Go Greener academies, etc. Okay. Like I mentioned, about half of what we do is the program world, and then the other half of what we do is market rate financing. So I want to take a look at the programs that we are partnered with, and all these are on our website, and we'll send out this link to you all. But these are on our website under special commercial programs. We also have a list of our residential programs. Many of these utilities have both residential and commercial programs, but since we're talking about the small business and nonprofits, we want to focus on those commercial programs. So we have a list here. Not all of the utilities or programs that we work with or that we're the lender for are listed here, but most of them are. And if you click on the program and then click to learn more, this will take you to an overview page of what the benefits of that specific program are. And at the very bottom, you'll see the program brochure or one-pager. Okay. Also, you can schedule contractor training for that program specifically, but these one-pagers will cover the details or the overview of these programs. As I mentioned before, many of these have a two-pronged approach to helping out customers. One is providing rebates for the qualifying equipment or project, and then the other is reduced interest for the remaining balance. All right. So this is Atlantic City Electric, one of our programs in New Jersey. The customer is their utility provider is Atlantic City Electric. They can get typically up to 40% or more rebates for qualifying projects. And then the remaining balance is able to be financed through NEIF, through us, at 0% for up to 5 years. That's an amazing program. This is an amazing benefit for most of those organizations, large and small, especially the small businesses. And we'll talk about why that is. One of the major things is that, in the customer category or project category of needs, meaning something happened that wasn't budgeted for, what are they going to do? But these programs also incentivize folks to move forward with some of that preventative work, right? Hey, our HVAC is 15, 20 years old. It's still working, but we know it's going to need to be replaced soon. Programs like this really help motivate that customer to do it now. And it's a good idea to take advantage of it. One, because, 25 to 40% or half of the project, sometimes even more, can be covered by the rebates. And then the rest is able to be financed at 0%. Through NEIF. So this is just one of the programs that we work with. A couple of other key ones that offer reduced interest, 0%, 199, 299, the Energize Connecticut, Indiana Energy Independence Fund. They really specialize in areas that have a greater need, whether that's low to medium income or underserved areas or small, family-owned businesses. We did a refrigeration project for an independent grocery store in Indiana that had a significant payback, less than 3 years with Indiana Energy Independence Fund. This is the Green Bank of Indiana. Their reduced interest 5.99 up to the first $150,000. JCP&L also a 0% program. They have a few different pathways. Their direct install pathway is geared towards those small businesses and nonprofits. Mass Saves, New Hampshire Saves, and PA Small Business is specifically for small business with reduced interest financing for small business owners. Again, if anybody wants to talk about a specific program, or I know many of you operate nationally, and and can operate in any of these territories, by all means, reach out. We can go over some of the key ones that you might want to participate in. As long as you're NEIF approved and also approved to do work with that program, then you can offer those customers in those utility areas these programs for rebates and reduced interest. So programs are a big part of helping customers move forward, and these are all current programs that are active right now. And unfortunately, a lot of the funding that was coming out that we were hoping for, specifically for residential and small business nonprofits, either they're tied up in court or uncertain as to what's going to be happening with that funding. So in the meantime, we have these programs that you can take advantage of, and then we have our market rate financing, and so that's what we'll talk about next. As I said, there is the equipment finance agreement, and that's our base mechanism for both programs and for our market rate financing. Market rate is available nationwide. And so if something does not qualify for one of those programs, the project doesn't qualify, like in the event of, hey, there's a boiler, an oil boiler, and that's all we can replace it with is another oil boiler that might not qualify for a program. And this is where we get into why do we care about financing? Customer says, I have this unit, I only have the budget to replace this type of unit. What do we do? And that's where we get into these types of projects, right? So there's we kind of break this down into 3 categories. Needs, which are typically emergencies and not budgeted for. Wants are, hey, we're thinking about doing this. We wanted to do this for a long time. We might have the budget for, but the reality is that most folks are not aware of the total install costs. They might have Googled something. We know no commercial equipment can vary, and with uncertainty on impact of tariffs or state of the economy right now, stuff fluctuates in cost daily. I've seen a 15 to 45% swing in HVAC equipment. They know they want this, or they're going to have to do it at some point, but they don't necessarily know if their budget's going to cover it, or they had a budget for it, but because of economic uncertainty or some policies that might affect their business, they want to hold on to that for operating expenses, right? Or for a slowdown in business. And so that want of equipment is going to turn into a need sooner or later. And then there's the nice to haves. And the nice to haves are something maybe that the customer didn't consider. And I don't like to use the term upsell because, and I preface this, I'm not trying to sell your customers on financing, right? We're trying to provide options for you to do business. We're trying to provide options for your customers to make their buildings healthier and more efficient and last longer, right? So I don't like that term upsell, but that's the reality, right? They might not know. They say, hey, we just need a new rooftop unit, new HVAC. Our AC went out. It's been really hot this summer in the eastern Midwest areas. We need a new HVAC, right? And what's the lowest cost option we can go with, right? Whereas the higher efficiency might not be that much more, but the customer doesn't have the budget for it. So again, this is where programs come in. This is where financing comes in, right? It's providing options with your customer. Now the needs are, they have to do that, right? They can't operate their business without refrigeration. Grocery stores, refrigerators go out. They cannot operate without the refrigeration. If you're an in-office type of building, or where your customers are coming into your building, or you have a large staff and your AC goes out, you have to replace your AC. If heat goes out in the winter, you have to do that. Again, those we see more coming to us saying we desperately need financing. The wants maybe, may or may not need financing. Nice to haves probably don't need financing, but when presented with financing, it makes those wants and those nice to haves affordable, right? And it lets you present a better case for higher efficiency equipment, stuff that you probably make higher margins on. But also that's going to ultimately affect the the benefits of and longevity of the building and your solutions, right? So that's really what we're looking to do, is saying, hey, I know we just need to replace the AC, or we just need to replace the furnace, but while we're in here, we can do electrical upgrade. We can do lighting upgrade. We can do these other things. You don't want contractors coming in. You don't want projects scheduled that disrupt business every other year or every 6 months or whatever. We can do all of this right now. And a customer might not realize that is affordable and or affordable through financing. So, I want to come back to, again, I'm not trying to sell you on financing, but what we know and what we see is that when you're offering financing or as part of your package saying, hey, here's what we're recommending, just so you know, financing is available. This is what the monthly payment would look like if you wanted to finance. That more people tend to move forward with the wants and the nice to haves, right? Covering their needs, but also the wants and nice to haves. And these, as I mentioned, these wants and nice to haves are future proofing that building, right? Is that an ounce of prevention is worth more than a pound of, I forget the adage there, Bill, if you if you remember what that is. Definitely have used it before, but really doing stuff today and preventative measures are less costly than when it becomes a need later on. And again, that's what we're trying to solve and provide solutions for. So the other thing is, you don't really know what your customers' needs are financially, and no one's going to be offended if you offer financing. And so, part of the mindset, I've been a contractor myself. My dad's been a general contractor for 50 years. I grew up on a job site. He really embraced the USDA Rural Development Program. People would rent homes from him, and he would say, "Hey, we can get you qualified for the USDA Rural Development, and you can own this home, probably for less than you're paying in rent." And there's some people didn't want to do that. Some people just wanted to rent, but many took them up on that. And so we really utilized that program to get people in houses. And it's the same for projects that you're doing, right? He's not trying to, force them to use that program or trying to sell the house. He didn't care. He'd rent that house for 20 years and make and it was an investment for him. But he was trying to give people options, right? And that's really what we're talking about, is giving people options. And the last point on here is offering financing allows your customer to entertain all of those solutions that you're providing and all of those options, not just the need, not just the want, but the nice to have, those higher efficiency equipments, the additional measures that are really going to make that building last longer and be more useful. I don't know how often I hear this, while we're here, we should do this. And I know most of the contractors that I work with, they're not trying to make an extra buck. They're trying to impart their experience and their wisdom on us and saying, hey, we really should do this while we're here. This needs to be done at some point. Maybe it's not an emergency right now, but it's going to be later on, right? So that's really where financing comes in. Whether that's program financing, which is super attractive, or even our market rate financing, which does cover the needs and the wants and the nice to haves. So,
hey Trey,
I'm going to stop there. Yeah, questions?
This is Bill. I think you were looking for that ounce of prevention is worth a pound of cure.
That's it. I've heard that many different ways, but yes, thank you.
There you go.
An ounce of prevention is worth a pound of cure. I've heard that said in many different ways, but it really does come down to budget. You probably see this all the time. Any of you that are out in the field know how many times a customer has not done something that they should, preventative, because they didn't have the budget for it. Right. And we try to work with them. What are your options? Is your option to say, hey, I can give you that at a reduced cost. I can cut my margins down. I know we're all wanting to help people, and we all do some charity, and we all, try to help people out when we can. But you can't keep a business going just through charity. And you can only help so much, right? So while we all do that and we all want to do that, we would not be in business if that's all we did, right? And so when we see a problem or something that will become a problem, and we want to provide a solution for that, and the customer doesn't have a budget, what do you do? Again, this is where financing can really help out. So a couple other key points. Most of our financing program and market rate is 100% project cost. There's no out-of-pocket cost for the customers, no down payment, no deposit required. Again, we have pre-funding. Even in those programs, there's pre-funding available where you can get 50% of the total financed amount upfront for that down payment, deposit, or material costs, and the rest upon completion. And so no out-of-pocket cost for your customer, true no out-of-pocket costs, and no cost to you. There's no dealer fees, no additional cost to contractor, etc. One of the other things that I forgot to mention, and this happened quite a bit. I started with a big company doing home performance and selling home performance measures. I was not the salesperson. I was the chief building scientist. So I'd go into these homes, and actually many of them were 20,000 square feet or larger out in California. Some of them were not homes, but modern art museums or businesses. And I would do all the testing, test in, test out, and come up with a list of recommended measures based on my experience and based on building science 101. At some point, they said, "Hey, why don't you sit in with the sales rep, engage with the customer, so you can explain the report and explain the numbers and explain the science behind your recommendations." And when I was in there, we 70% more people moved forward, right? Because the costs were pretty high to do the stuff that we were recommending. And they found out that it wasn't necessarily the sales, it was the knowledge and the experience that people trusted. And that's what we put that faith in our contractors, that people trust what you're presenting to them is the right solution. But the times when we did not get callbacks, or where a customer just didn't call us, was 90% of that was because they didn't have a budget, or the cost was more than they expected. They didn't have an idea of it. Sometimes it was just because they wanted the free audit or the low cost energy audit, so they knew what to plan for in the future. But 90% of that was because they didn't have a budget for it. And back in the day, we did not have any financing available. I think at some point GE came to us with financing. It was 25% interest, and many people took advantage of that, which today seems insane to me. But again, the reason we didn't get callbacks wasn't because they didn't like me. It wasn't because they didn't believe in our solutions. It was because they didn't have a budget for that, or they weren't expecting that, project cost. So, and then, work with someone you trust. NEIF is being a B Corp. It's kind of a badge of honor. That's on your landing page. We're going to show you that resource too. But it's we're a trusted organization, backing by the Department of Energy, Energy Star partner. Many different organization associations. We're proud to work here, and we're proud to be working with all of you, and we're proud for you to present that to customers too. It's like, hey, NEIF is a trusted lender, and we're not a finance company. We're not a traditional bank. We're a trusted lender in the space. We're happy to have you promote that as well. Okay, so I'm going to stop there because the last little section that we want to go over is just all the additional resources that are available to all of our partners and our clients. And I'm going to stop and see if anybody has any specific questions or comments on things that we went over, and or would like me to review anything else in more detail. Again, you can put something in the chat if you don't want to speak up, or you can unmute yourself and chime in. Or if you are just listening in, don't want to say anything, you don't have to. I mean, I know I do a good job of talking, but
Well,
yeah, go ahead.
sorry. We will get a copy of the slide deck so we can review, correct?
Yeah, absolutely. And then I'm going to be, like I said, I jumped around a couple onto our website. We'll send you those links that I was referring to on our site as well.
Okay, perfect. Thank you.
Joe, do you have a question?
Are there any like industries that would be excluded from getting funding? Like say, for example,
Yeah,
a cannabis
good,
cultivator or
good question. Currently, cannabis is the only industry that we cannot lend to because we are federally regulated. And until cannabis has a deregulation, then we cannot lend to cannabis directly. Now, um, there are some kind of caveats to that. Um, if there is a building owner, that might be a strip mall or shopping center, and there's a dispensary in that facility, but the building owner is making upgrades to the entire facility, that would not be a direct to cannabis lending, right? Um, that being said, the programs, specifically JCP&L and Atlantic City Electric, those programs are providing rebates. The same qualifications for those projects that would qualify for those programs. Cannabis can still qualify for those, just not our financing.
gotcha. Okay, thank you.
No. Again, it's not really, we're not, trying to get around this situation, but we have had a lot of building owners that finance and then a cannabis moves in later. Again, that wasn't direct to cannabis. That was we were working on the building to prepare that building for a new tenant. That new tenant later just happened to be cannabis. We cannot have the borrower be the cannabis industry, specifically.
I got you. Understood. Thank you.
Mhm. Otherwise, yeah, I don't think there's really any limitations. The biggest hurdle that we come across is just because we do credit underwriting, right? We're not, in some cases, we can do building as collateral, but the equipment secured financing is a UC1 filing on that equipment. It's not a lien on the property. It's just a UC1 filing on that equipment. We don't use the building or the land or any of the other assets as collateral. And so, we have a pretty high approval rate, I think around 70%, 60 to 70% market rate, and about 87% program approval rate for customers. That being said, it is credit underwriting, right? We're just looking at normal credit, and it's not a credit agency like for residential or consumer finance. It's not, there's not Experian or TransUnion or whatever. It's we're looking at business profitability or cash flow, or again, that personal guarantee where it would come down to personal credit. But that's kind of the only real limitation is, is there equipment that's being installed, and does the borrower qualify? For nonprofits, sometimes that can be an issue. We do a lot of churches, and so they typically, smaller churches don't necessarily have balance sheet or financials. They may. I mean, we've seen notebooks, accounting kept in a notebook, and we've been able to approve some of these organizations. Some of them are larger, but it's always worth applying, right? It's not a difficult process, and we're going to try to get that customer approved. But again, most of the stuff just comes down to borrower's credit.
And another factor, I'm not sure if you've seen this, power procurement contracts. Would that have any conflict with like NEIF funding? Like, would there be an opportune time for them to maybe do a power purchase agreement to reduce their utility bill either before or after the program?
That's a good question. Yeah, I don't know how that would impact before. I know it probably wouldn't if they were to do that after the fact. I don't think that would have any impact. But let me ask about that. That being said, we actually do power purchase agreements for solar, for small business and for nonprofits, but there's a minimum of 25 kW. So we have a kind of a different subset of loan options for solar. And then we can do energy service agreements as well, but there's a minimum of $1 million. Now, again, there might be some nonprofits and smaller businesses that have large comprehensive projects they want to do, but that's the limit on energy service agreements. For power purchase agreements, solar specific, 25 kW and higher, we can do that power purchase agreement specifically.
Is that for nonprofits on the solar, the 25 kW? Can that be on combined properties? So if all 3 meters sit on, let's just say 7 acres of land, so we're doing 3 different systems, but
Mhm.
they're financing all 3 in one, does that
Yep.
apply if we meet the total kilowatt requirements?
Yes, I believe it does, and I can confirm that for you. But yeah, I believe it does as long as it's under that one power purchase agreement.
Okay,
Because
thank you.
they've definitely been structured for multiple meters. I've seen those PPAs structured for multiple meters. If sites are, combined sites, not necessarily 3 across the United States, but combined site with different meters.
Great, thank you.
Okay, so last little segment here is just talking about what all we provide for our contractors. Once you're approved with NEIF, you have access to all of our financial services, both residential and commercial. And what we see is a lot of residential contractors do light commercial. So they'll do a lot of the small business or nonprofits. Again, churches just comes to mind because that's really common. And and we're also seeing a lot of businesses that are now expanding their offering. So many residential contractors are now doing light commercial and branching into commercial. We see a lot of solar, residential solar that's getting into commercial, and we see a lot of commercial contractors that are also now doing residential as well. All looking for more ways to expand their product offering and to get more market share. And so again, access to all of our financial programs, also all of our utility and government green bank programs. You have access to all of those. Now, many of those you do actually have to be approved with that program as well, but not all of them. Indiana Energy Independence Fund, you just need to be approved with us. There's another handful that as long as you're NEIF approved, you're approved to operate in that program. Either way, it's not a difficult process to get set up as a trade ally with any of these other utility programs. No contractor fees for our commercial financing. There's no additional fees for a contractor at all. There's also the ability to buy the interest rate down. So our market interest rate is what it is. It's going to be dependent on the borrower's credit and the risk of the project. But there's the option for you to buy that interest rate down and include that in the project cost. If anybody's looking to do that on any specific projects, by all means, let me know. We can talk about that offline. Rebate Bridge. So this is something I did not touch on, but Rebate Bridge is another product that we have available for contractors where there are significant rebates that are not through us, or and it might be through one of our programs, or through another program somewhere else that we're not even aware of. If there are significant rebates that are getting paid to you, and those are taking a long time to get paid out, we can actually purchase that rebate from you for a small fee. And once that project is completed and that rebate is guaranteed, as in the agency's writing the check, but it still takes a long time to get to you, we can purchase that rebate and pay you that rebate once that project is completed and the rebate's guaranteed, and then we will collect the rebate from the agency. It's a little bit of a process for us to get set up with some of those agencies, but not entirely difficult or impossible. And we're already doing this with a few agencies and organizations around the country. So if there is a program that you're participating in, or agency that you're getting rebates from for your projects, and you want to talk about Rebate Bridge, just give me a call. We can talk about that offline, because there are some nuances to it that we want to make sure we cover before we say yes or no, we can or can't do it. Again, we mentioned the B Corp status and reputational enhancement. Part of our portal is designed for you to be able to create monthly payment proposals and share those with your customer on every project. Again, just to show them that there are options, and those are going to be co-branded with NEIF and with your company, right? So it does show credibility. On top of which, things like the Go Greener Academy, what we're doing today, sales training, talking points, brochures, co-marketing or co-branded marketing materials. We provide all of those to you. We can show you a list of our marketing materials if you want anything co-branded, or your commercial portal, those proposals, you want those co-branded. We can do that pretty quickly and pretty easily. And I'll show you, quickly, let me pull up my resource list again. A couple additional things that you may or may not be aware of. All approved contractors are now part of our NEIF network. When customers come to our homepage, the first thing that they see is find a contractor. We get a lot of commercial customers, so building owners or tenants that come to us looking for financing and also asking for us to recommend a contractor, right? And so you're all listed in this Find a Contractor tool. And so customers can search by, near them, or property type, residential, commercial, state, or program. If they know that there are, these are one of their utilities, or by specialty. Hey, we're just looking for, geothermal solar or other contractors for commercial in Georgia. And so a list of contractors comes up. Each of these contractors and everyone that's part of our group gets a landing page. If you had sent us a logo, your logo would be here, link back to your website, the services that you provide, the programs that you're part of, and customers can actually apply from financing directly from here. But again, just lends more credibility to to your company and the financing that you're proposing or offering to your customer. Additionally, on our under contractors, commercial contractor resource center is a list of down here towards the bottom is the whole finance process in detail. So it's a kind of a cheat sheet for you once you've gone through the onboarding, a sales handbook, just how to talk about this. We don't expect you to be finance experts. We're here to help. We're here to talk to your customers if they have questions. We know what your specialty is, and that's what you should be focusing on. But we do provide some resources if you want to be knowledgeable. Finance toolkit, all the different types of financing that we can provide for government muni projects, solar. There's different loan structures for solar that we can offer. Our basic parameters of every different type of loan that we can do. Brochures, benefits of equipment financing, just a good overview of talking points and stuff that you can share with your customer. Again, all of these can be co-branded. Training videos on portal process, proposal generation. And then we kind of this service, premium contractors, we just give this to everybody now. So you don't have to sign up for premium contractor services. This is part of our entire suite of services that we provide for our clients and our partners. And that's it. So, that's all I've got today. I know I thought I was going to be shorter than that, but I tend to talk a lot. And I'll stop here if anybody has, again, any more questions or wants me to go back to something or review something. Otherwise, we'll send out this presentation. We'll send out the video and links to stuff that I covered that was specific to our website. Again, I'll open the floor, questions, comments, any recommendations for future Go Greener academies, anything that you all want to see or specific topics that you want us to get some industry thought leaders or some specialists in, we're happy to do that too. I think the next one we are looking to bring in some experts to talk about specific topics, and we'll be doing a poll to see what all you all want to hear about. Okay, well, I guess with that, we'll give you a few minutes to your day back. Again, I want to extend my appreciation. Thank you so much for joining me today. Look for our other Go Greener academies. As I said, all of these are on our website, recorded under think if you go to our contractor section here, the very bottom, Go Greener Academy, all of our previous Go Greener Academies are listed. The recordings are here, and you can watch those. And the PDF presentation or the PowerPoint is going to be listed there too. So a lot of cool Go Greeners that we've done, some really neat technologies, industry experts. By all means, take a look at this page. And then if you have any other questions, comments, or want to just chat about your business and what you're doing or what you're thinking about doing and how we can assist, by all means, don't hesitate to reach out, call me, text me, email me. If anyone has an email for me, at the bottom of my signature is a calendar link. You can set up any meetings, schedule something directly on my calendar for you and your team. We're happy to talk with everybody at your company, your sales reps, your admins, process folks, and let you know how we see other contractors kind of expanding their business and closing more business.
Is this where you're going to post today's webinar?
We will post this, but we'll also send it out to you.
Okay, cool. Thank you.
No problem. Okay, with that, I'm signing off. Thanks everyone again. Enjoy the rest of your day, and we look forward to working with you. Take care.